Okay, so let me introduce myself. So I'm Appel GRATUIT. I'm an international wealth manager, and my goal is to explain Bitcoin to other wealth managers. So who are you and what are you doing?
Yeah, hi, I'm Dr.Wüstenfeld. So my background is I'm an economist. People might know me from my analysis on-chain data on Bitcoin, and also on my macro analysis on how Bitcoin relates to developments in the economy, reactions to central banks. And more recently, so starting in mid-May, I've joined a new company, a Millennium Green Tech, which is a company that is offering a Bitcoin mining solution, a relatively innovative one, where we are basically eliminating operating risks. Bitcoin miners are physical hardware machines, so they can break down, or you have political risk, you have to move your machines. And the company I'm working at, we have a lot of smart guys in finance and trading, so we're basically offering exposure to Hashrate by also going on markets and trading futures and derivatives without the risk of machines going down. And my job at the company is I'm there as a researcher, so I've done my PhD in economics on Bitcoin as well, and investor behavior and economic uncertainty. And there my job is to do research on Bitcoin mining, how it relates to energy consumption, sustainability, and in general Bitcoin mining developments.
Okay, great. So just to take us back to a few years back, what was the time you decided to do a PhD in Bitcoin, in economics and in Bitcoin?
So, originally I didn't start my PhD in Bitcoin, so I started my PhD in October 2017, and around June, July 2017 I discovered Bitcoin and crypto for me. First started out, I was right on time for all the ICO hype and all that stuff, so I started with Bitcoin and then got drawn into all this gambling stuff and learned my lesson, played for Bitcoin. As I've been saying, I started my PhD more around the topic of development economics, so how international trade is influencing, for example, the industry sector in developing countries in Africa, Latin America. But after 1 year, I think everyone knows that who is in Bitcoin. I got so drawn into the topic, and I have to do something on Bitcoin, and so I talked to another guy who is doing a PhD and has done at that time a PhD in finance, and was okay, let's do something on Bitcoin. That's how I ended up doing research on how Bitcoin behaves in times of uncertainty, how it is depending on the country it's traded in, and then also how Bitcoin investors behave relatively to sentiment shifts, uncertainty shifts.
Okay, cool. Why did you focus on the hash rate and why it's important, basically?
So maybe a little bit on the most recent research I'm doing for the company. We are looking at the Bitcoin hash rate and how we can properly explain the Bitcoin hash rate. So which indicators can we use to predict how the hash rate is developing over the coming weeks, for example. And the hash rate, it's a very important indicator for particularly Bitcoin miners, because if you have a Bitcoin miner, you have a certain amount of hash rate on your hardware. And if the general hash rate of the network is increasing, that means, relatively speaking, you as a miner will get fewer rewards because your computing power or hash rate relative to the network is going down. So it becomes
more competitive to survive.
It becomes more competitive. So it's a pretty important metric, in particular for miners. Some people liken it to network security. So if Bitcoin hash rate goes up, they say, okay, security is increasing.
It's more secure.
Of course, there's some truth to it, but it's not just purely the hash rate, but you have different considerations. The miner distribution on the world, concentration of miners, mining pools, etc. So it's a little bit more complex. But of course, usually as a network participant, it's good to see if hash rate is going up, and more miners, more potentially more also energy is used to secure the Bitcoin network.
Because in my part, I try to focus on self-custody and becoming sovereign on their own Bitcoins. It's really important. But for the mining industry, if we want to make a comparison, we need to talk about the decentralization of the mining.
Yes, that's.
So, in your research, have you seen how much there is concentration of mining? And that's a concern.
Yeah, so I mean, it's not the majority of my research at the moment, but of course, we are seeing the landscape is constantly shifting in which countries Bitcoin mining is. The majority of Bitcoin mining is going on. For example, I mean, we had China was a very important player a few years back, and then China banned Bitcoin mining. Tried to ban. I mean, there's still 15-20% of the hash rate, something like that, is estimated to still be in China. So it's still a substantial amount. But all these developments, then you have miners moving to the US. Now we have all the big public miners in the United States, for example. But yes, we might have at times concentration of Bitcoin miners in certain countries, but I mean, that's the beauty of the Bitcoin network. You have the incentives to seek cheap energy sources, and that also pushes maybe some miners into other countries. I mean, we have Bitcoin miners in Paraguay, and some of those have now moved to Ethiopia because there we have cheap hydro energy. We have smaller miners like Gridless that are mining in various parts of Africa. So I think in the long run, we will, of course, at times we might see some concentration, but we are always going to see movements to cheap energy sources. And in my opinion, we're going to see even more competition on that front because, I mean, we have the Bitcoin halving events, so you get the rewards are declining with each halving.
So it's becoming harder and harder to survive for miners. They're going to have to find cheaper and cheaper energy.
At least if the price is not catching up with the decline in mining rewards. And I mean, right now we're seeing that still Bitcoin price has yet to go up significantly after the Bitcoin halving. If you look at the price chart, we've seen price go up at the beginning of the year, but that was more due to Bitcoin ETFs until March, April, but then we had the halving. And since then, price, of course, has been going up and down a little bit, but it's essentially moving sideways mostly. But at the same time, miners only receive half the Bitcoin now, so that means, of course, you have some fluctuations in miner, like the fees paid by network participants, but generally, like the fees, if you send transactions, you pay also some fees to miners, and of course sometimes these are going up and down, so that might at times compensate, but right now it's relative to the hash rate you put in, the amount of US dollars you're getting is
I don't know exactly how the fees work. It has something to do with the hash rates, or?
I mean, the fees is generally just, I mean, we have the Bitcoin blocks and they are limited in space. So if a lot of people want to send transactions and the mempool, so where all the transactions that want to go into the next block are stored is full, then people might start to pay more satoshis to come and to get into the next block. And that's how that's
so
like a normal
on the activity of
basically simple demand and supply markets here, and it's not enough to compensate for the decline in Bitcoin rewards. So right now we are at near the lowest levels of rewards in US dollar terms you're getting relative to the amount of hash rate you employ.
So the miners have to basically run on their liquidity, or?
I mean, it depends on the miner, of course, because it doesn't mean that mining is not profitable anymore, just that you need to have efficient machines, cheap electricity, and I think that's only going to, in the long run, to intensify, so that competition is increasing that. For example, as a Bitcoin miner, you not only need to rely on cheap electricity, but that you, for example, need to reuse the heat, for example, for district heating or for other purposes, like using it in an industrial process, simply because what you are earning as a Bitcoin miner might not be enough at some point. This is not necessarily the case yet, but I think we're going to see that more and more. And that's also going back to the point of centralization of mining. I think this will naturally, in a couple of years or down the line, push miners to be more decentralized, because if you want to reuse, for example, heat, etc., you might not be able to have those huge mining farms, because you just have to be in very specific locations where the heat is needed. And
that could be actually a great thing, because it could have a better impact on other industry around Bitcoin.
Yes, I mean it will decentralize likely Bitcoin mining further, and it's also great because then it's integrated into maybe industrial processes, so the heat that is generated can be reused for other productive purposes, etc.
Like agriculture or something like this.
Or in other manufacturing processes where you need to heat up, for example, water, and you can already preheat the water then with the Bitcoin miners, and then the rest you can of course still heat with other means, but things like that.
That's awesome. Maybe we can go back to your actual research. So can you tell us a little bit more about it?
Okay, I mean, the research right now is still a bit of work in progress, but we already have the first results. So, as I've been saying, like, we want to explain a bit more when is hash rate going up, when is it going down. So, when are miners potentially switching on machines or shutting down Bitcoin mining operations. And so far, there has been some literature that has looked at how hash rate and, for example, Bitcoin price are related, but what we are doing now is more explicitly also considering other Bitcoin mining variables, so such as the hash price, or Glassnode has a Bitcoin difficulty regression model where you get an idea how much does it cost to mine one Bitcoin. So for example, it could cost $26,000 for a Bitcoin miner to mine a Bitcoin. Is it profitable to do that?
I think for my audience, perhaps you can explain the difficulty adjustment.
Yeah, in the Bitcoin network, what we want to have is that the Bitcoin blocks by design are coming in roughly every 10 minutes. And what is happening now, let's assume we are now having roughly every 10 minutes Bitcoin blocks coming in. But now we have all of a sudden more Bitcoin miners coming online, so more work is expended to find a valid hash for the next block.
So in that case, the hash rate goes up?
In that case, first what happens is blocks are coming in faster, so let's say every 7 minutes. But we don't want to have it that the blocks are coming in just faster and faster because more and more energy, because then we would end up with blocks in the end that come in every second or something, if we would have never had any adjustment. So the algorithm sees, okay, over it's roughly 2 weeks, it sees, okay, we've seen blocks come in on average 7 minutes, and then it's, no, that's too fast. So what the algorithm is basically doing, it is making it more difficult for Bitcoin miners to find a valid hash. So you can, maybe let's simplify it a bit. You can say, okay, you have a dice with 10, like numbers 1 to 10, and you want to find, like, you're throwing a dice as a miner, and you want to have a number that is below 5. So if you throw a 4 or a 3, then you're allowed to basically mine the next block, simplified. You're throwing a dice, and let's assume you find every 10 minutes a valid number, so a number that is 4, 3, 2 or 1. But now other people are seeing that, hey, he's mining and it's profitable, he's earning Bitcoin. So they will also bring their dice to the table and they also start throwing dice. So, but now if you are adding more dice, more people throwing dice to the game, then you will find a number between 1 and 4, statistically speaking, more often. And that's what kind of is happening with Bitcoin as well. Now you find this number more often, and then the algorithm is basically saying, okay, now we're finding a valid number of the dice more often. So now you can only, next time, if you throw dice, only if you throw a number 1 or 2, then you can.
So it's become harder and harder. Okay.
And that's essentially a bit what Bitcoin mining does, just that you have a SHA-256 algorithm where you input something and then you get a hash. And depending on the difficulty in the network, you have to have a certain amount of zeros up front on the hash, and the more zeros you have, the more difficult it is to find a valid hash.
Okay.
So yeah, that's essentially what is happening.
The difficulty adjustment.
Yes.
And when you say the algorithm, it's the Bitcoin rules, the Bitcoin.
Yeah, it's coded in the rules, and basically where you have it coded in that you want to have the blocks every 10 minutes, and if it deviates, we have spoken about if it comes in faster, but we can also have times where, let's say you have then 12 minutes, every 12 minutes a block. Then on the opposite, the hash function will adjust so that it gets easier to find a valid hash. So, for example, a 0 is removed from the hash function.
Okay. Cool. Now, can we talk about sustainability in mining? I think that's part of some of the research you've been doing.
Yeah, that's one of my main interests right now. Doing.
So for people who are new to Bitcoin, they might think that Bitcoin pollutes a lot.
Yeah.
So that's first step.
I mean, that's when you follow the media. Luckily, it's shifting right now, thanks to guys like Daniel Batten that's informing people more with data on that stuff. But you may get the impression Bitcoin is boiling the ocean, Bitcoin is setting the world on fire, stuff like that. Of course, Bitcoin mining is energy intensive, consumes a substantial amount of energy, but if you look at it, it's maybe roughly around 6.5% of the whole electricity consumption of the world. So you can say, okay, by that it's already not like a massive amount. But what is interesting, if you look at it, Bitcoin miners are, we've spoken about that, it's highly competitive, so you need very cheap electricity, ideally. And where do you get cheap electricity? That's usually in areas where too much electricity is produced, generated, and there's no consumer for that, no company, no people. And what you very often are seeing is that, I mean, where do we have wasted electricity? It's very often nowadays with renewable energies, for example. If you go to Africa, let's say, for instance, in very remote areas, it's still a challenge to bring a lot of or electrify these areas. And one of the ways is to set up hydro dams, so that generate electricity. But one issue right now is you have to set up a hydro dam which generates electricity anticipating demand over the next 5 to 10 years, because at the beginning maybe people might not demand as much energy, or you don't have yet the electricity lines to maybe just to the nearby village, but not the next village 2 kilometers away. So if those projects are realized, there might be a lot of extra energy that is not used.
Surplus. So it's a global opportunity cost.
Yes. So
it's a waste for
basically that electricity that could be used is just not, it's just waste energy. And that's where Bitcoin miners come in. So that's, for example, what Gridless is doing in Africa. They go into these sites, they set up their Bitcoin mining container, and they work in cooperation with the hydro dam provider and say, yeah, we can take everything that you are not selling to local people, we are just buying that from you.
So it's a revenue for...
Yes, it's a revenue for the hydro dam provider, but it's also good for the mining company. So it's great in many ways. On the one hand, it's renewable energy sources.
It's green.
It's green. So you're helping secure the Bitcoin network by using green energy.
Yeah.
Hydro dam provider is profiting because
they're getting some revenue, otherwise it
which
would
you
be a
didn't
waste.
get otherwise, which, by the way, is a big problem right now still in Africa, because that also means that many hydro dams or renewable energy projects are not financed, because if you buy these hydro dams that are anticipating electricity demand in 5 to 10 years,
There is not enough.
then you have to spend a lot of money at the beginning, but you don't have a lot of paying customers in the beginning, which means if you look at the economics, it does not really make sense. So in a sense, many of those projects have to rely also on development financing or development aid, so like non-profit oriented financing. So yes, you remove on the one hand the uncertainty over the coming 5 to 10 years. So because even if you say we expect that energy demand is rising in 5 to 10 years, so we already have the capacity, this might not happen. So until then, just Bitcoin miners can still keep running, and if demand is not coming, then the Bitcoin miners will simply stay there and say, we guarantee you, we are paying you for the electricity. But of course also for the first years, even if then energy demand is rising over time, you have the Bitcoin miners that are still running, and then when demand of the local population is rising, Bitcoin miners will start shutting down, and you can move them to a new location.
Because that's also one thing that people have to keep in mind, is that the mining industry, it's a mobile industry, so they can just close things, go into another country really easily. And so that's I
mean, the positive thing about Bitcoin miners. So right now, artificial intelligence and those high performance data centers, they're becoming more and more a hot topic, of course, because they are also demanding a lot of energy. And to be fair, if there's a location that works for artificial intelligence data center right now, the returns are much higher, because the companies using AI are paying quite a lot of money for the computational power. But these data centers are very specific location requirements, so they need very reliable energy source, they need stable internet connection, so they have more specific requirements than Bitcoin miners, and that poses an advantage for Bitcoin miners in these very remote areas where you might, of course, you can use Starlink as internet nowadays, but still it's much more feasible, easy to set up a Bitcoin mining container somewhere.
Because Bitcoin mining facilities doesn't need that much quality of internet connection.
Yes, you don't. So you only need to have the connection to have the block space, like to synchronize the blockchain, etc. But you don't have to send gigabytes of data packages like for artificial intelligence over the internet. So and also for Bitcoin miners, even if during the day, for example, there's peak demand by the local population during certain times, you can regulate Bitcoin miners down. Like you can say, if they've run at 80% normally, then you can say, okay, we can also run at 10% capacity, something like that. You can't at the moment really do that with high performance data centers, because they need to be up and running for the processes usually that they're doing.
And they cannot be turned on and off.
Not as easily as Bitcoin miners, so there's much more flexibility for Bitcoin miners in that regard. Yeah.
Cool. Is there any other part of your research that you want to share?
Maybe also a bit on the sustainability part,
Yeah,
just
sure.
the general numbers, because we've been speaking more now about the incentives, and that, of course, people might say, yeah, you're talking now about some project in Africa, but what is happening in general with the
Globally.
Bitcoin network globally. And if you look at the numbers, Bitcoin mining is, like, by the energy mix, it's on the one hand one of the greenest industries. So depending on the numbers and data we look at, we are above 50% as renewable energy sources, at least, if not more. And what we've seen also over the last years, hash rate has gone up. Of course, some of that might simply be due to more efficient miners, so that can use the same computing power.
Okay, so it's not necessarily more miners, but that can be the same number of miners, but with better equipment.
Yeah, I mean, you can have miners that are generating more hash rate.
Okay.
But what I mean is, so we have seen the hash rate go up over the last 2 or 3 years very strongly, but at the same time, the energy intensity, energy used, is relatively flat.
Wow.
Or the no, not the energy. The CO2 emissions are flat by the amount.
The what? The CO2 emissions?
CO2 emissions.
CO2 emissions. That's a great information.
Yeah.
I didn't know that.
And I mean, that's partially because you have more efficient miners. So basically, they use
Consume
less energy for the same amount of hash rate generated.
Computing power.
Yeah, but also by using more green energy, potentially over time.
Wow.
Which makes sense because we have had the shifts from countries where maybe they didn't use as much green energy for electricity as before. I mean, if you look at miners in the US, many of them use a lot of renewable energy sources, or even tap into something like flared gas, which is.
Can you explain that? Because that's a huge topic.
Yeah. So right now, what you have is if you're running oil wells, for example, you have some gas, like a mix of gas that you're not really using because you're just companies are more interested in the oil itself. So what often is happening, you might have seen that pictures of that next to those oil wells or refineries, where like you see a flame, big flames, and what they're basically doing is they just that's gas which they're burning because they're not using it for anything.
And that's 10 times more.
And
let's put it more than CO2 emission.
Yeah,
that's methane.
And if it's burning, that's already better. But in some instances, it might just be the gas evaporating into the air, which is very bad because it contains a lot of methane gas, and that's much more harmful or climate potent than CO2 emissions. Depending on the source, can be 20 to 80 times something like that more harmful. And miners are in some instances using that gas to turn it into electricity and then use it for Bitcoin mining.
So that's what we call the gas flaring?
Yes.
Okay.
And instead of flaring it, you can use it for a generator to generate electricity and burn it in a more efficient way so that not as much harmful emissions are released into the environment.
So in those cases, Bitcoin mining or anti-pollution.
Yes, like you could say it's carbon negative.
Carbon negative.
You're reducing by much more the amount that is emitted into the atmosphere.
And at the same time, you're securing the Bitcoin network. So that's crazy. That's all the good incentives.
Yeah, of course. If you look at this mining from methane gas, or it comes with some challenges. So it's still
It's really technical.
yes, and
be able to do
have
that.
to sometimes you have to first purify the gas that comes out of the oil wells, and so at the moment some of it might be profitable, but it's also challenging technically and from an investment perspective.
I mean, it's also capital incentive. It requires a lot
Yeah.
of capital and technical.
Yeah, so we have in many instances yet to see how good of a solution it actually is in that instance, but so we have to be a
The
bit
financial part, you're
yes,
using.
yeah, so we have to be a bit more realistic on that part, because maybe right now those guys from the oil wells are saying, yeah, you can just take the energy, maybe they want 1 or 2 cents per kilowatt hour, but yeah, or even they give it away for free or something. But the thing is always with these, if there are economic opportunities, maybe those oil operators at some point they might realize, oh, it's actually makes sense, it's profitable, so pay us more on the electricity.
It's going to be a negotiation.
And then
afterwards.
you are working a very thin line on, does it still make sense to invest in this kind of ventures, yes or no? And it's going to be interesting to see.
That's kind of the same problem with other miners who are also they also have to negotiate with the country
so
they're in.
ideally, if you have like long-term contracts, then it's good, because then you can say, I can let my mining machines run for the next 3-5 years. I'm paying a certain amount for the energy, and it's fine. But yeah, I think it's going to be interesting to see over the coming years how viable it actually is. I mean, that makes it also an exciting industry, because everything in these areas is very new. So
Yeah.
people are still experimenting. Real-time data is coming in on profitability, etc. So it's very exciting
That's cool.
to look at these developments and then see where we are headed over the coming years. And also, yeah, I think in many aspects around Bitcoin mining, we have yet to see also use cases, etc., which we haven't even thought about nowadays.
Do you have something in mind, or?
I mean that's because we haven't thought about it. It's hard, but I think it's going to be interesting on the industry side, on heat reuse and what potentially can be done there, or on how to integrate Bitcoin mining
In the economy, basically.
in the economy, how to integrate it into grid balancing.
Into grid balancing,
For example, because
that might be something that for developed rich countries.
so that's more something that is relevant also for us here, potentially in Europe, because what we are doing nowadays, right now, is we're increasing the share of solar energy, wind energy, which in my opinion is also not a bad thing, but you have like the issue with those renewable energy sources. Sometimes the wind is blowing, sometimes not, sometimes the sun is shining. I mean, yesterday it was raining here, now it's cloudy, the sun is coming, it's just shining from time to time. So what we are going to see more and more is strong fluctuations in energy supply, which you don't have if you, for example, I don't know, have a coal power plant or a gas power plant, because you can just keep them running, or you can adjust gas power plant depending on if there's peak demand or stuff like that. And of course, in the long run, we will have hopefully better solution in storing energy. And I'm not talking necessarily about batteries in the traditional sense, but any other storage solution
Because
for
batteries
energy.
are yet to be created to work.
Yeah, at a large scale, right?
large scale.
Because you need something at a large scale to store a lot of energy. And
So how does the Bitcoin miners can be integrated on this thing?
I mean, they can be integrated as a flexible demand source.
Okay.
When it comes to flexible, that's a bit more challenging because, of course, as a Bitcoin miner, you also want to be running as much as possible, because if you just have your Bitcoin miner running 50% of the time, well, then you're not going to be profitable, because you have to buy hardware and you have to recover the cost of the hardware, so you need to have a certain amount of uptime of your Bitcoin miner. What we're seeing right now sometimes in Germany, for example, at times we have to shut down wind energy, for example, and then the government is paying those energy providers for their losses, because they tell them, okay, we have too much energy in the network.
I don't really like to talk about government expenses, because it's people money.
Yeah.
So when you say it's government spending, it's people money to be paid, because they didn't create yet a system that is efficient.
And I mean, so that money is already spent on shutting down partially those energy providers at times and compensating them for the potential gain they could have had. And in the end, why not instead say, we have Bitcoin miners here, we are just using the waste energy, maybe we need some kind of compensation, not necessarily by the state, but also by the network providers who want to have a stable energy net. So that it even works when you don't have an 80% uptime, 90% uptime of your Bitcoin miner, but still you get some compensation to have something where in times of where you have too much energy, Bitcoin miners can be turned on to absorb the energy. But what makes more sense, and what we are already seeing for example in Texas, you have Bitcoin miners running as base demand, so they demand energy, and during times of stress on the energy network due to high demand, or because you have bad weather but demand is still high, and for example solar is not producing enough energy, then Bitcoin miners are shutting down. But in the first place they create some base load.
They've been doing what?
They're essentially a base load for the network, because they can say, okay, we can be up and running anytime, as long as the energy price is not too high.
Okay.
So I mean, what you have to do is usually you're building up overcapacity in solar, wind, so that you have more energy to also be able to accommodate peak demand times, etc. But what are you doing with all that excess energy? And that's where Bitcoin miners can come in, and they can say, yeah, we're like, most of the time we are just taking the energy, and as soon as there's peak demand somewhere, or for like a week there's some problems on the network, they will shut down, because someone else is paying more for the energy than Bitcoin miners at that time.
So that's interesting. The grid balancing. Yeah,
I'm not saying in the end it's a magic solution to everything.
We still need to work on it.
I'm just thinking politicians, energy providers should be more open to at least run some pilot projects on these topics. I know it's done from some guys that are passionate Bitcoiners that are running projects to generate numbers, to also convince politicians, etc., that it might make sense. But yeah, just to give Bitcoin mining as one of the pieces in like a transition to green renewable energy economies, just to give them like at least a chance to prove themselves and maybe be like a solution.
Perhaps can you tell people where to follow you and look at your research?
Yeah, I mean, you can follow me on Twitter. I'm very active there. Just search for my name. Just
and
my
on
full
LinkedIn
name.
also, or less?
Also on LinkedIn, also active.
But you post more on Twitter?
Yes, I'm posting a bit more on Twitter, but for the very relevant stuff, I also have it on LinkedIn, and also follow along the Digital Asset Research Institute, which has been founded this year.
Okay.
I'm part of the team of that institute now, where we are also trying to collect a bit more academic research on Bitcoin, Bitcoin mining. Also, of course, talk about these topics and make it more accessible as well for policymakers.
Okay.
Yeah, so
You said the name was?
it's the Digital Asset Institute. It's
Okay.
short, it's DARE.
Okay.
DARE. Yes.
Okay. Cool. Thank you.
Yeah, thank you very much for having me.